How's it going out there? I'm Mike, and today I want to talk to you about a trend within the healthcare industry that I don't think's talked about enough amongst investors, and that's the transformation to virtual healthcare. I'm going to talk to you in depth about the biggest player in the industry, and that is Teladoc Health, which is also a favorite of Kathy Wood and the Ark Invest team. And then I'm also going to talk to you about a small player, or at least introduce you to a small player that you should keep on your radar, and that is CloudMD. So as I mentioned, Teledoc is by far the leading player in the transition to virtual healthcare. They operate in 175 different countries and have over 60 million customers around the world. They offer a fee for service by appointment system, but they also offer a fee to employers so that their employees can access the Teledoc services. And think about that for a minute. If you were a business owner with hundreds of employees and your employees, when it was fit to do so, could take a virtual doctor's visit rather than a standard doctor visit. Typically, doctor visits happen during the workday, during regular business hours, and it means taking time off work, leaving early, coming in late, fighting traffic, going downtown, sitting in an office and waiting who knows how long to be seen by the doctor. And if you weren't sick when you arrived, maybe you caught something while you're there. So really just not a great experience all around, and actually reduces productivity. But with this service, from the employer's perspective, their employees could just book it online and do a standard checkup virtually from their office desk or on their phone on a break and get back to work. So it's actually good for productivity. And from the customer side, something that I see here from Teledoc is that they're actually seeing better outcomes and people more likely to take part in their regular checkups. I know I'm bad for that, going to my doctor's appointments or seeing the doctor on a regular basis because it's such a hassle. But with this service, people are going more frequently, which means catching health issues sooner, which we all know is so important. And through their recent acquisitions of Livongo, they actually have not only mental health, but chronic care management. That was the piece that Livongo bought. So they actually have now not only a primary care physician service, virtual, but they also have the whole chronic condition management component. So the whole basically suite of healthcare options available through virtual appointments. Of course, there's some conditions and some situations where in-person visits are required, but they're actually seeing that these virtual visits are sufficient 95% of the time for patients that are using these services. So if you've been watching stock or investing YouTube videos for a while, I'm sure you've heard of Kathy Wood and the Ark Invest team. Their Ark Invest Innovation Fund is the largest actively managed ETF now, and it had over 170% return in 2020. So as you can imagine, there's a lot of investors very interested in what stocks that Ark Invest is buying. And one thing's for sure, that Ark Invest are big believers in the transformation of the healthcare system into virtual healthcare, and believers in Teledoc. A quote here from Kathy Wood: Teledoc currently has 60 million members around the world. We're going to see it go to 220 million in the next 5 years, which is an annual compound growth rate of 30%. And we believe its revenue will grow to nearly 50% annual compound over the next 5 years. So that's growing from currently it's close to 1 billion in 2020. So we're just shy of $8 billion by 2025. And looking a little further here at some of the Ark Invest funds, so the ARK-K, which is the ARK-KG, which is the Ark Genomic Revolution ETF that they manage. Teledoc, as you can see here, is actually the second largest holding in that ETF with a weight of 6.42%. So it's not even a true genomic play, yet it's the second largest holding in that fund. So I find that quite interesting. And looking at their Ark Next Generation Internet ETF, ARK-KW, granted you could say that definitely Teledoc is an internet play. It's actually their fifth largest holding in that fund with a weighting of 3.69%. And another fund, so they have 5 actively managed funds. This one here is the the Innovation ETF, the Ark K. So this is their largest fund. And this one actually has Teledoc in its 5th heaviest weighted position with a weight of 4.43%. So they're actually quite heavily weighted in Teledoc. And Teledoc, since it's performed so well over the last few years, has actually contributed a lot to the success of Ark Invest over the last few years. I know you hear a lot about Tesla, and obviously it's their heaviest weighting and their largest bull case, but there are some other companies like Teledoc here that I don't think get near as much attention. Looking here at Teladoc's financials, they've been absolutely killing it as far as revenue growth over the past year, and they've definitely been a beneficiary of COVID-19 as far as the movement towards virtual. But I think people are not going to go back. I think this is just one of those movements that's been accelerated and is a trend that's here to stay. So the revenue actually on the quarter was almost 289 million, and that was up from the same quarter of 2019 of 138 million. So 109% revenue growth on the quarter. And year to date, the revenue growth is year over year at 79%. So just massive, massive growth. And they did operate at a net loss of 35.9 million, which in third quarter 2020, compared to only minus 20.3 million only for the third quarter of 2019. But they did have a couple acquisitions in there, including Livongo and InTouch, so those two acquisitions accounted for $25.2 million expense. So, and those are obviously going to bring in additional revenue down the road. So if you take the acquisition aside, their net loss would be down to 10.7 million on the quarter. So that's looking pretty good. And they actually gave some guidance in the last quarter. They expect revenue in the fourth quarter to be in the range of 294 million to 304 million. And that puts total revenue for 2020 in the range of, I guess they got just over 1 billion to 1 billion 15 million, so somewhere in there. So again, we're looking at close to 100% revenue growth year over year in that case. And just looking here also at their stock chart, you can see they've actually had quite the run over the last 5 years. And again, I just don't think this company is talked about. Maybe healthcare and telehealth, virtual health is just not as exciting as the Teslas and Bitcoins and genomics and whatnot. But this is explosive industry here. They've actually seen nearly 1,100% gain in the last 5 years. Like, that's Tesla territory. I think they're like 1,800, but just massive growth. And in the last year, even about 164% growth in stock price appreciation. So they've definitely performed very well, and they don't trade cheap. Their price to sales is about 32.5. But let's look here at this Excel sheet. If you see just some really rough math on how a company can, with this kind of growth, could just really grow into a valuation quickly. So you see 32 times sales, that's crazy, but they're growing at like 100%. So you look at the 2020 numbers here, current share price of 227.78, and they have 145 million shares outstanding. So that puts their market cap, which is just share price times shares outstanding, at just over $33 billion. That's their current market cap, the value of the company. And their 2020 sales, based on their guidance they provided, will probably be about $1,015 million. So that gives them the price to sales ratio of 32.5. But looking at some numbers here and looking at 2025 and where this stock could go, and say that Kathy Wood and the team is correct that their revenues are going to continue to grow compound at 50% year over year for the next 5 years, that would put their sales up to about $7.7 billion in 2025. And let's say, to be on the conservative side, let's lower the price to sales. Let's give them a lower valuation because, like they're becoming a little bit more mature of a company. Revenues are still crazy high, or revenue growth is still crazy high at 50%, which usually warrants a higher valuation. But let's drop that down to 20. Maybe the market's trending down, or valuations are coming back down in line to historical averages, and see where that nets out for us. Well, that's going to give us a market value of $154 billion come 2025 at that growth rate, with 7.7 billion in sales. And as far as share price, that would give us a share price, if it's trading at price to sales of about 20, of $1,063, up from its current price of 227.78 here in 2020. So looking 5 years out, that is a compound annual return of 36.15%. And that could be much higher if growth happens to be higher than 50%, or it gets it trades at a higher valuation, or a valuation premium higher than 20. You could see higher than that. You could see lower, but you could definitely see how this company could give you 36% plus returns annually for the next 5 years. One last thing to mention about Teledoc: they will be presenting at the JP Morgan Healthcare Conference on Tuesday, January 11th. And stay tuned for any highlights from that, or if they post a presentation on their investor relations page. A lot of times those presentations can give you some really good insight into the company and their prospects for the future. So be sure to check that out. And the next stock I'm going to talk to you, just again, because I don't want to drag this video on too long, I'm just going to introduce you to this one. Something else is another company that I hold personally as more of a speculative play. And again, another play on this trend of virtual healthcare, which I think is only going to grow, is CloudMD. So the reason why I do think Teledoc, well, they are the clear leader right now. But even with like Kathy Wood's projected growth rates for the next 5 years, they would still only have a 6% market share in 2025. So this isn't a zero-sum game. There's going to be many players. And CloudMD is a very small player that actually operates out of Canada, but they have operations around North America. I might do a more detailed video on it in the near future, but it actually trades on the OTC under the ticker DOCRF at $1.74 a share, with a market cap of 283 million currently. It also trades on the TSX Venture Exchange in Canada. And the thing I like about Cloud, it's taken a real holistic approach to healthcare. Digitally, it offers not only primary care, but also counselors and chronic care providers as well. I think it's acquired over 7 different companies over this year, at least alone. And it is growing incredibly fast, although it is still very small. But it's looking like it'll have about total revenue of about 35 million here in 2020. So definitely another stock to have on your radar, and maybe dive a little deeper into, and something I might share a little more information on here in the future. If you like this kind of content, please subscribe to the channel and like this video. Remember, always do your own due diligence and research before making any investment decisions. Happy investing.